All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for January 2023. It's Wednesday, or Friday night, excuse me. All right, so we're going to start with the swing portfolio. So we're using TC2000 here. So this is my tactical set of symbols. Fits on one page, about 50 symbols of my typical trading targets. I'm going to go to another personal portfolio. So these are all subset portfolios. Somewhere I'm doing looking at components of the XL series or um, one for my brother Bill. I'm looking for uh, various clients that have portfolios that we study together when we coach, things that are working on infrastructure, etc. So I'm going to go to the swing portfolio, and we'll just start with right from the top. And let me get on our 30-minute tactical screen here. All right, so you will recall the story of Tesla. We had a nice trade through here. I was irritated because I felt like I got bottom ticked and kicked out, only to watch it reverse. I elected not to re-enter here because I was concerned about entering in a zero state, so I did not take that one. I wanted to see the next day to see if we could get above this support level. It then opened up in here, and I felt dumb for not taking that entry the day before. But I've felt dumb before, so that's nothing new. And then after everything kind of calmed down, it seemed to be holding support here around 155 yesterday. And after the nice gap up, kind of collapsed into here. And so on the COTA 2 intraday, we took that entry with this as the stop. That's about a $3 stop, all told, with an entry about 157. And today, Tesla just resumed and then closed near the top of the heap here at about almost 178. So that's like a $21 move on our $3 risk. So even though this could have been a much better, I mean, I would still love to be in this trade from here and then have used that as a second entry. So we left a lot of money on the table in retrospect because of the shenanigans in this region. But the important thing was just to hold my nose and re-enter when I was in the zero state with the proper risk. And so that $21 gain divided by 3 that's sitting at a 7R win just in 2 days. And I've moved my stop up to here basically till where the PSAR will open. So I've locked in that move. Check or hold. This is marijuana, MSOS. And this had been a Godzilla that terminated in here, and we saw the COTA 2. And so we tried that on the long side. It had a fractional gain. And when the PSAR flipped, we just got out of that trade. And then when this collapsed here, treated that as a collapsing dragon. So we were short from here with a standard risk box, which is about, call it 15 cents. And entering at about 695. It collapsed further on this collapse. Took a second position here, and then that gave a really nice follow through yesterday, and we saw that as a potential compound critical state here, and so we put our stop in at the PSAR yesterday, and then today It gapped up a little bit, so that simultaneously exited us, and then we took that as an SSC because that is certainly a harsh winter, and this is a Godzilla. So it held there. The PSAR flipped. So we're looking at about another standard risk box of 15 cents. And that thing closed well at 645. So that's about a 20-cent gain on a 15-cent risk. So this day one of the SSC reversal is holding about 1.2 R. And then the gap, so the short from 695 down to 625 was a 70-cent gain on a 15-cent risk, which makes this about 4.5 R on the first position, and then call it one more R on the second position. So roughly 5 R in that swing trade on marijuana. Plus we're holding plus 1.2 on this one, and it closed right at a resistance level. If it can break out above this, if we can get a second day of momentum, I wouldn't be surprised to see it get to and then stall at that price level around 670. I would like to see it get to the 5-day high, but as a reasonable one-day target up, if we can just get another up day like this, now that it's in the summer, 670 is in play on Monday. Check or hold. This is clean energy, so we had a good long trade that worked here. The stop and reverse at a micro win. We took a COTA 2 entry long and watched it all evaporate and get to zero because this was a gap in here. Rather than taking the PSAR flip like it should have, we decided to hold on and give it a little more room, and it rewarded us with a scratch. Then there was a big gap down 3 days ago in a recovery, and I treated that as a COTA 2 because you have a swing low and a higher low and a PSAR flip. So we put that trade on at about 44.60, and this is 43.50. So that's about $1.10 risk, and it closed up here at 46.20. So that's $1.60 on $1.10. So this is holding about a 1.5 R win right now, and I need to move that stop up to, I think we'll call it halfway up the stack. I want to lock in that gain, so that's where we'll have our stop. But if it is able to hold here and follow through and break above 47 even, then I'll put a second position on there, because it has cleared the two previous peaks, and those peaks are rising. So if it can break out above here, that feels pretty good in PBW. Cliff, this was our SSC. Because this was a lower low, we treated that as the harsh winter, and that became the SSC. PSAR flip, standard risk from 2030 with a 10-cent risk, and it closed at 21.75. That's a $1.40 gain on a 10-cent risk. That just can't be right, because that's 14R. So that's a pretty good trade. 21.60. Oh no, I'm sorry. That's right. All right. So this is 2040, and that's 21.60. So that's $1.20 on a 10-cent risk. Yeah. It didn't feel like it was that good, but I'll be darned, it is. I like the fact that it's above. It held. This is where it should have failed if it was going to fail with resistance. It didn't. It just powered straight through. So as soon as this breaks higher, I'm ready to roll some of that 12R gain into a new position. If I'd had my wits about me, I would have added here. That one's in pretty good shape. Real estate, we had the Kata 2. There was a swing low. That was the exit that terminated a nice trade. Harsh winter, Kata 2, standard risk of 50 cents. So an entry about 88.50. And it closed at 91.90. So that's $3.40 of gain so far on a 50-cent risk. Almost 7R. 5 days. So CVS, this was the last symbol in the S&P 500 that still gave a Godzilla. You can see down here, it was at a 10-day low, 30-day low, 150-day low. PSAR flipped. We took the next day's entry here. Standard risk, and this thing is working nicely. Closed strong, so we're at about 1.5R, and this thing could keep going. We're looking now that it's cleared this resistance. There's no resistance in here at all until it gets to about here. So to me, 89.50 is in range, and that's why I'm ready to put another position on this one on the way up. 2 days in a row in a Godzilla of upward movement that cleared important resistance. That's a pretty good sign. Ethereum, our last trade on this one was the Kata 2. Didn't take the exit. Finally, much to our chagrin, just escaped out of it. There was probably a Kata 2 in here somewhere today. Didn't take it. There were other things that were moving directly, and this just feels kind of like dead money right now. We'll see next week. Treasuries, we got the we tried this one long. It gapped down and kicked us out for a 1-hour loss. We took the SSC here. It's slightly in the money right now, so we're just going to keep our stop down here at 105 and try to let that grow. That's really a defensive position against market weakness. So I like that it's in the money here a little bit, but really it's just a defensive play. It doesn't become interesting till it gets above the 10-period high up here, which is about 108.75. So think of that as a hedge position. Devon Energy, we've had 2 really nice Kata 2 trades on this one. And we got out of that. We learned to get out of that one, right? Because the PSAR flip and get out. Watched it come down here. This nice rebound. PSAR flipped. We played this long. Today was a big gap up and a harsh sell. And you know what? That seems like the standard move. So I just reduced some of my risk and took about a plus 2R on that one. So we're flat in Devon now. And that's typical of energy sector ETFs and companies, that they tend to make sharp moves with sharp turns. And so you got to grab them when you can. So that was the Devon trade. Mexico, we put the second position on here yesterday. It gapped up and then started to fail, and it was approaching my break-even stop anyway. So I just took the fractional and got out of both of these positions. On the first position, it was about a 2R, and so maybe 2.1R altogether on the compound Mexico trade. I'm still interested in getting back in on that one, but I didn't want to have over the weekend risk. McDonald's, I have to zoom in a little bit to see that one. This one is basically flat. This was a stop and reverse, and we're slightly underwater a little bit, because this is still the first or actually the second day of the trade, my stop is still down here, and leaving that in place. I'd like to see this continue. But the worst thing is, a -1R down there. So I already feel the emotional loss on that one. So the McDonald's long is just hanging around. This is U.S. Steel. We have an emerging dragon here and a Kata 2. So it broke through that. So we were interested in it here. Should have had it here, but we got it here in the afternoon 3 days ago. There's our standard risk. Closed here. So we're holding about +1R. U.S. Steel, I think we got to take this stop. And on Monday, I'm going to move it up just into here so that I can reduce some of my risk and lock in that little piece. I'll be interested in it if it can break above the 10-day high. I would consider adding a second position here if it can go. So that one's in the money, but still trying to get out of the starting blocks. Brazil was another, just like Mexico, was an exit today. We had the Kata 2 entry here. I was really treating that as an emerging dragon. I wanted to see it get out of this chop. So 2 days ago we got that entry. I took the wide stop here. So that's almost like a 80-cent stop. I could have maybe picked that here. I would still have gotten out at that location today after it closed here yesterday and then started to sell off this morning. I just wanted to keep a 0.5. And I'd rather cash a 0.5 than be holding a scratch trade over the weekend. So that's the swing trades. Took some carefully measured profits today, but they all feel to be in a pretty good position, and some of them are really postured to explode. So I'm liking those. So that's the swing portfolio update. All right, so we'll shift over to sniper trade of the day. Here's Tesla. Three-minute chart. Here's how it closed yesterday on a positive note. Gapped up to here, established a high and low of the OR3 in the blue box, that first 3-minute chart. The second bar, it broke above that, so we're long. And then this is the standard risk box of about $1.20 in Tesla. So that's our standard risk. Check or hold. Moves along smartly. We take about an R win on this one when it comes back and hits the PSAR. It had two chances to break higher. It didn't. It went from the summer into the fall, so that felt like a good place to stop. It briefly toyed below and then reversed back up through the dragon, and so I re-entered here with a Kata 2 and a standard risk box. Check or hold. So this would be a Kata 2, standard risk. So now we've cleared with this second entry here. We're about about 3R in hand with momentum, and we've cleared the previous resistance levels, and this thing is just going. So on that bar, I think your stop should be about here. You know, when you put that second position on, you probably want to have your stop at the 1 bar low, and you might even be trailing it with the edge of the dragon. As long as by now, when you're about 2R in hand on the second position, that you've locked in at least that much. And here, I think I want to be there. I think my rule was just following the R10. So this did not kick us out. I thought hard about adding a third position here, but I felt like there was already weakness starting to creep in, so I was just willing to let those two positions ride. It stabilized, fell through the dragon. Now you see the R10 coming through the dragon and hitting the PSAR, so I take that exit. On the first position, that's 1 unit of risk. 6, 7. So 7R on the first one, 4R on the second one. That's about 11. And 1 here, so we're up about plus 12. Tesla, the most important stock in the world, with a built-in base of fanboys. What would you call this? Caught at 2. You've got the higher lows, PSAR flip, cross the dragon, RLXD, standard risk box. If that gets you out, then this should get you back in. I just let one position ride and waited for the R10 to cross the dragon, and just that relaxed entry gave us another 2. So almost 15 in Tesla today. Let's see. I had another one set up here.